I'm not usually one for conspiracy theories, but here's one about pensions, which just seems too plausible for me to ignore. Imagine if fund managers, IFAs, were able to get you the kind of returns that American pensions deliver. And what do I mean by that? Well, UK pension funds generally tend to benchmark the domestic market of the United Kingdom, and US ones generally tend to benchmark their domestic market of the United States. So, whilst over the last 10 years, the NASDAQ would be up, say, 800%, the FTSE would be up about 54%, roughly. You can work out the exact numbers. And I'm ignoring reinvesting dividends for a moment because they actually cancel each other out for both countries. Yields tend to be pretty similar. So the Americans tend to get richer quicker. Okay. Why don't the British fund managers just invest in American securities? Well, there's a couple of reasons. And now the government really wants to clamp down on that because they want to make sure pension funds invest even more so in domestic markets, which, as I said, is somewhat worrying. Imagine what would happen if you hit your retirement goal sooner, like an American did. Well, for an American, most of them don't have passports anyway, so they're going to spend it in America, not a problem. And they've got a large immigrant workforce, which can replace the older people leaving sooner than they might in the United Kingdom. In the United Kingdom, if you were to retire a few years earlier, well, it's going to cause upheaval in the employment market, and you're probably going to bugger off to Dubai and spend all your money over there. No benefit to the UK at all of you spending your pension money. So what do governments do in those kind of situations? Well, they certainly have no incentive, and neither do fund managers, of you making your money sooner. Because guess what? The fund managers and the IFAs lose a client. After all, you're at the spending stage. What the hell do you need funds for in that case anyway? It's cash in the bank, drawdowns, and so on. And the employer loses somebody in the workforce, so they don't want to make sure your employment pension is doing anything other than the bare minimum, keep you working longer, keep you motivated, because you ain't got the money to retire. You don't have, as the Americans might put it, FU money. Okay? And yeah, sounds like a conspiracy. Seems unfortunately plausible because it seems to fit the facts. Anyway, if you want to learn more about pensions and growing your money and breaking out of such traps and hopefully getting better returns, though can't guarantee better returns, the past doesn't guarantee the future. And this isn't individual financial advice, of course. But have a look at all the free resources I have at the link in the bio and at alprishpatel.com/links. Thank you.